Imagine waking up one morning and believing your future is secure. Your savings are growing, your investments look unstoppable, and everyone around you believes that the good times will never end. And then, within just a few hours, everything disappears. This is the story of the 1929 stock market crash, one of the most devastating financial disasters in modern history. It was not just a collapse in stock prices. It was the beginning of a global economic crisis that would change millions of lives forever. To understand what happened, we need to go back to the 1920s. This decade became known as the Roaring Twenties. Factories were producing more than ever before. New technology such as automobiles, radios, and household appliances completely transformed everyday life. Companies were growing rapidly, and the American economy seemed unstoppable. People were extremely optimistic. Newspapers celebrated economic growth. Investors believed that stock prices would continue to rise forever. Soon, buying stocks became a national obsession. Many people had little knowledge about investing. They simply saw their neighbors getting rich and wanted to do the same. Office workers, teachers, shop owners, and even farmers invested their savings in the stock market. Some people didn't even have enough money to buy shares. Instead, they borrowed money from banks and brokers. This system, known as buying on margin, allowed investors to purchase large amounts of stock with only a small down payment. As long as prices kept rising, it seemed like an easy way to get rich. But there was a dangerous problem. Stock prices were rising much faster than the real value of companies. Businesses were profitable, but not enough to justify these extremely high prices. The market had become a bubble. Throughout 1929, warning signs slowly began to appear. Industrial production started to slow down. Some companies reported lower profits. Experts quietly warned that stock prices were becoming unrealistic. However, most investors ignored these warnings. They believed the market would always recover. Then came October. On October 24, 1929, a day known as Black Thursday, panic spread across Wall Street. Thousands of investors rushed to sell their shares. Prices began to fall rapidly. For a short time, major banks stepped in and bought large amounts of stock to stabilize the market. It seemed like the worst was over. But confidence had already been shaken. Only a few days later, on October 28th, known as Black Monday, panic returned with even greater force. The next day, October 29th, became one of the worst days in financial history. Black Tuesday. Millions of shares flooded the market. There were far more sellers than buyers. Stock prices collapsed. Fortunes built over decades disappeared within hours. Some investors watched helplessly as their life savings were wiped out in an instant. Banks had lent huge amounts of money to investors. When borrowers could not repay their loans, many banks began to fail as well. As banks closed, people rushed to withdraw their savings. But there was a serious problem. Many banks simply did not have enough cash. Families lost everything they had saved for years. Businesses struggled to survive. Factories reduced production. Companies laid off workers. Unemployment increased rapidly. People who once lived comfortably suddenly found themselves standing in long lines, hoping for food or work. The effects were limited to the United States. Around the world, trade declined, industries slowed down, and severe economic hardship spread. This financial collapse turned into the Great Depression. For years, millions of families lived in uncertainty every single day. Some lost their homes, others lost their jobs. Children grew up in a time when even basic necessities were hard to obtain. Governments eventually introduced new financial regulations to prevent such a disaster from happening again. Banks were placed under stricter control. Stock markets adopted stronger rules. Economists spent decades studying what had gone wrong. The crash of 1929 taught an important lesson. When fear and greed control financial markets, prices can become dangerously disconnected from reality. 1929 are still remembered Economic today, growth can create not only as the day the stock market blind optimism, but as the day millions of people realize that fortunes built even today, nearly a century later, investors still study the events of 1929. Technology has changed, markets have changed, but human emotions remain the same: hope, greed, fear, panic. These emotions still influence financial markets around the world. The story of the 1929 crash is not just about money. It is a reminder that every boom carries risk, every investment requires caution, and every generation believes that this time is different. History has repeatedly shown that it usually is not.